Okay, once again, there's a fresh onslaught on the market, so not looking good at all. In fact, 6950 was also taken out on the Nifty just a couple of seconds ago. We were talking about how some of these stocks like BHEL are just butchered in trade, but there are some fresh, casualties coming in from the likes of BPCL, etc. And it's interesting, we were talking to Madhusudan Kela about the real estate and the housing market. Today, real estate is getting completely trashed. Look at DLF, look at Suntec Realty, DB Realty, the smaller stocks, well, there's just no escaping over there. Good time as any to get you some market opinion. Every afternoon, Mangalam Malu gives us a check on the dealing rooms, and he's been telling us about the panic there. Now he's landed up at one of those dealing rooms at IIFL, and he is in conversation with Amar Ambani. So Mangalam, take it away.
That's right, Sonia. In fact, apart from the usual din and chatter that one witnesses at the dealing room, at IIFL's dealing room, I also am sensing an eerie sense of submission to the screen with the kind of volatility and the turbulence that we've seen in the takeoff. So I have the captain of the ship with me, Amar Ambani. Amar, a month and a half ago, all market experts, including you on our channel, were believing that the long-term bull run is intact. After that, a lot of water has flown under the bridge. The Nifty is down about 1,000 points from there. The Bank Nifty 30 percentage points from the top. Do you still believe the bull run is intact, or some underlying variables have changed? What is your sense?
So, we always knew that there are tough times globally, or things in India have not totally improved, but we were quite confident that, a big bull run is still yet to unfold, and I don't think that has changed. If anything, this fall which has come, this huge fall, if I can call it that, and not a large crack, does present savvy investors with an opportunity to always buy what they wanted to but never thought they had the right prices. But I'll tell you what's changed. In the last few weeks, suddenly global investors have lost confidence in their central bankers and whether they can revive the economy, because all the policies seem to be failing for the last few years. And now suddenly you have Japan and ECB who want to continue easing, get into negative interest rates, and you have the US Fed who keep feeding us with the view that rates will go up, and now suddenly their commentary seems to suggest that they will go slow on this, and in fact there are some pockets of the market who also believe that the Fed might do a U-turn. So I think there's a complete loss of confidence. If you look at results globally, they've been bad across the globe, and that possibly tells you that there's something seriously wrong in the world economy. Most or many economies are staring at a deflation. So I think all these problems have compounded, and in ordinary times maybe you looked at oil and you said that this is a great time for oil consuming nations, but given the kind of devastation that we've seen in oil, and with the IEA estimates that came recently, it's pointing to a slowing world economy. So, I think these are fears, and you take any developed market, barring none, you take any developing market, all these markets on a 1 month, 3 months, 6 months, 1 year basis, all of them are down. So I don't think Indian market can, be decoupled and therefore not fall, and that's what we've seen. Of course, we have our own problems, but I think this is largely the reason why we've got this shock selling in the last couple of days.
Right, Amar, I was going through your notes before. You did recommend averaging at around 7,500, but even from there we are down about 700 points.
Yeah. So if you look at the Nifty, then one thing is to say that I will buy only when the Nifty bottoms out, but I think nobody can ever tell you what the bottom for the Nifty or the Sensex is. So one thing is to look at the index and say, I'm going to look at whether this goes up or goes down, and therefore whether I make money or not. But the other way of looking at it is that you look at stocks even possibly outside the Nifty, and you look at what is the right level to buy that stock if it's really attractive, and go for it. And I think on that basis, maybe the market has not bottomed out even now, but there are a lot of individual stocks that will bottom out even before the entire market kind of bottoms out. So I think one needs to look out for those stocks and go in for that. Having said that, while we do believe that the long term is intact, in the last few weeks even we've kind of gone slow in recommending our clients to add aggressively to positions. So to that extent, I think if you look at the notes that have come out in the last few weeks, we hardly had any buys going out, and in fact on the trading side there were a lot of short calls, but I still believe that the long term is intact, and the long term is intact. The only thing is, and the pain is not really whether we will further fall 200-300 points on Nifty. I don't think that's the big issue. I think the bigger issue is that the first half will be extremely volatile and tough. So major part of 2016 is going to be, like you said, the domestic economy too. These results haven't helped. I think hats off to the governor for doing what he did, because I think stock market aside, we do need to ensure that we clean up our books and we'll be better placed for growth later. So there are domestic problems, and I would wait for an earnings revival to really go out and invest. But at this point, I think savvy investors should look at individual stocks and invest, because like Warren Buffett says, the best time to really invest is in a bear market.
I believe the anchors have a few questions for you as well.
No, Amar, I just had a very quick question. The mid-cap is down 330 points, actually 3%. Anuj was warning us that there will be a lot of brokerage calls, brokers calling out, saying that cash market stocks will be sold to top up margins. Is that the situation you're getting in your dealing room? Your colleagues having to call up and sell cash stocks just to top up margins?
So, if you have a look at my dealing room around, I think this morning people are a lot quieter than they usually are. So I think I don't think there's too much of panic this morning, but there would be a lot of margin calls yesterday, and I think a lot of that would have been done. So I think we've seen a lot of pain yesterday, but that's as far as margin calls is concerned. That's not to say that the bears who are now in firm control of the market are not holding on to their shorts, maybe even considering further shorting of the market, and therefore it's, just because the margin call on the retail side might have been done, I don't think it will suggest that a bottom is near.
Okay, no, I take your point, Amar. We have to take a break on that note. Thank you very much for giving us a feel of the dealing room and your own gut in terms of what an investor should be doing. Mid-caps down 3%. On that note, we'll take a break and be back.
Introducing